Welcome everyone for this second session of the ePay Summit Europe. During this hour, we will discuss the question, are we innovating payments solely for the tech-savvy market? Adding to that, we will also investigate how companies can ensure a more inclusive approach to innovation to avoid leaving people behind. My name is Rick Koekelbergs. I'm the founder, managing director of the banking scene and the host of weekly virtual roundtables, the banking scene after work. This kind of discussions is what I'm having on a regular basis, but I never have them with such a big panel as what we have here. So I'm really excited, and I really thank the organization for bringing all these people together. The first one being Gijs Boudewijn. Since March 2021, he's a Deputy General Manager of the Dutch Payment Association. Before that, he was responsible for payments and security at the Dutch Banking Association. He's also chairing the legal support group of the European Payments Council, and is vice chair of the Payments System Committee of the European Banking Federation. Why I think it's especially relevant to have him here on the show is a recent announcement that in the Netherlands, cards have finally become the dominant means of payment at point of sale, even at street vendors. Our next speaker is more future looking. He's the fintech expert, Suresh Vaghjan. Am I saying that correctly?
Vaghjani, yes.
Vaghjani. Fintech advisor with a very long experience in both FCA regulated companies as well as leading edge technology companies. He held positions of CEO, managing director, and president at a number of companies such as PaySafe Group and GPS. So having him here is an absolute honor, knowing that he has been working, for example, on payment wearables already since 2010. Our third speaker, she is not a technologist and not really working for financial service, but working a lot with them. She is the founder of Finthropology, and she is specializing in financial behavior, including product use, decision-making, and financial inclusion. She has a PhD in anthropology, and she has been designing and carrying out empirical research since 2013 for countries and regions all over the world. Our fourth speaker, Maxime Galache, is the CEO of CoinChange Financial. So if we talk about, are we innovating solely for tech-savvy market, of course, we should not avoid the crypto in the discussion. So welcome, Maxime. And then last but not least, Jeremy King, Regional Head of Europe of the PCI Security Standards. He leads the Council's effort in increasing adoption and awareness of the PCI Security Standards internationally. His main responsibilities include gathering feedback from merchants and vendor community, coordinating research and analysis of PCI SSE managed standards through all international markets, and driving education efforts and council membership recruitment through active involvement in local and regional events like this one. So we have a banker, we have a fintech expert, we have a crypto expert, a security expert, and an anthropologist. What could a moderator like me ask for more given the topic? That's right. That's your input. Of course, I did prepare a list of questions, and if you want, I can fill that hour. But of course, that would mean that it becomes our panel and not your panel. So if you want to make it more your panel, please contribute in the debate, in the discussion function, in the chat, on your app or on desktop. I will try to incorporate that in the overall discussion. That way we make sure that it becomes your session and not ours. With that, thank you guys very much for joining us. I'm going to start with the very first question, which is for Gijs. Gijs, you serve the entire industry and not just the innovative fintech companies. What do you think of the title of this session? Are we innovating solely for the tech savvy? And should we do more to let everyone embrace new payment opportunities?
Well, thanks for having me, Rick. Great to be on the show. We're thinking about your question. It really is, of course, it's a no-brainer. It's a rhetorical question. We all know that the trend is towards more digitalization, which means that people pay more digitally and that we run the risk of having digital exclusion. We need to go more for digital inclusion, of course. Unfortunately, speeded up by COVID-19, of course. So for me, it's a no-brainer. We don't only need to innovate for the tech savvy, but also for people my age and older. Also, because one of the nasty side effects of the digitalization is, and what we've seen, at least in my country, but I also know in the colleagues in Belgium, I've talked to the Belgian colleagues, and you see it in the UK, for instance, too, is that also the criminals, of course, know how to hit and run in this digital world.
That's why we have Jeremy.
Yeah, I know. So what we really need to do is make the elderly more tech savvy and innovate to help protect them against, make them more digitally resilient, if you will, against the very smart scams and schemes, phishing, spoofing, and so on. And I'm very glad that Aaron is here, because we have started working with behavioral psychologists. How on earth should we educate the consumers that are being very, I mean, the front door is locked, and I mean, they don't hack the bank, and the technical security is okay, but unfortunately the customer is the weakest link, and you can put 10 locks on your front door, but if you can seduce people to unlock all those 10 locks, an 11th lock doesn't make any sense. So we've sort of come, we believe, to the end of the line in terms of physical security, and then we're looking into other ways of making people more aware and trying to understand, because the criminals know what pressure points they should push on, the greed, fear, and well, yeah, I won't speak for Aaron, but I mean, that's where we're going. But they also need to understand technology better, the more vulnerable people. So that we're not so worried about the tech savvy people. It's about the elderly, and it's because of the speed of change is a bit worrying here.
So it's more like the concern is the adoption of very innovative services that may not be taken up by the elderly or less tech savvy people. Let's generalize it, because we often go in discussion, is the elderly versus the young, and that's not really the issue, is it? You also have very innovative people like yourself that are maybe even more pro innovation and technology than the young kids at home.
Yeah.
Erin, you invest a lot of time and energy driving more diversity in the role of fintech and innovation. And I remember a discussion that we had together where one of the statements was that worldwide, you see most of the time women managing the money of their family, although most of the services are actually developed for a more male population. According to you, do you think that our view on innovation is sufficiently inclusive today? And yeah, what do you think of the title, for example? Does it make sense?
Yeah, I mean, I think what's really interesting today is that innovating for financial inclusion increasingly means diversity. And I find that quite exciting. So, okay, financial inclusion has usually referred to banking the unbanked, to basic versions of those services. Over time, those services become less basic, and with things like mobile money, we've seen lots of add-ons such as insurance products. But now we're seeing a shift beyond that to not just innovate for people who are low income or don't have access, to innovate for other groups, like you say, for women. Around the world, we're seeing the develop many financial services, all kinds of services that are tailored to women. And the idea here is that we need to address a very real gender gap that exists in finances. And it exists for a couple of reasons, at least. One is that male children are often given more financial education than female children. So women sort of can often start with actually they're a bit behind the eight ball in terms of managing their finances. Another one is that there is definitely, of course, a wage gap in terms of women's earnings. And so these things put women behind men in terms of managing their finances. Financial products for women can assist with this, not just because they're marketed to women and are more appealing, because they build in features that appeal to women. So, for example, making it easy to learn about finances and being easy to invest, or providing things that women appreciate, such as opportunities to network with like-minded women to learn about finances. And now beyond women, we see products being developed for other groups as well, such as the elderly or refugees, for example. And so this is the trend we're seeing. So what I would say is that innovation is, because it's increasingly targeting these niche groups, that means it's targeting diverse groups. And that's what provides that opportunity to be more inclusive. Now, we're on the right path. It's just, I think, that companies need to do more to think more specifically about who those groups are and what their real needs are, and do that kind of research into the consumer's behaviour in order to make sure they really do design services that can drive diversity and inclusion.
Interesting. So, Suresh, innovation and fintech is actually about serving specific niches and making sure that as an industry, we serve all the niches possible to make sure that we have an inclusive payment landscape. Is that the correct understanding, and are we doing a good job in the payments industry?
So look, I think there's two areas here, and I'm going to talk about kind of diversity when it comes to running, a company or having an organization, and I'm going to talk about the kind of customer base or the market size they have. Yeah. And the first thing I'll do is probably apologize that I may upset many people with what I'm going to say, but I'm going to, these are my observations that I've seen in the market. These are my kind of experiences that I've seen. So when it comes to diversity, I think generally, we have to go beyond certain measures. And I think the beyond, it goes beyond things like gender, it goes beyond race. I think that when we look at examples, and I'm going to give you a real example, I would sometimes meet so-called new fintechs that say, we're going to launch this product, it's going to be groundbreaking. And then when I look at everybody that's within the organization, has come from an old world banking perspective. And we've seen examples, where companies have tried to launch, like established banks have tried to launch their own fintech versions and have failed because their mindset has been very much the same thinking. To get a management team or an operating team that comes from different backgrounds give you such a different perspective, right? So, males, females, but from, disadvantaged backgrounds, people from areas that are deprived, and they have a different perspective on things from how we operate. And I think fintech has a real opportunity to get to these people to potentially, really service that market and understand it in a way that traditional banks haven't to date. And to come to the second point in terms of, servicing the different areas, I think when you look at fintechs, they are often funded in a very specific way, whether they're VC funded, whether they're private equity funded, and what they are measured on is conversions. So what they do is they market to the early adopters because that's where they show the real return. And to get to the older population, which may be harder to convert, it's not something that they're measured on. Like some of the things that we've seen that have been government initiatives have had where they're not being measured on numbers, they've been measured on actually making an impact. It's a different play. And one example I'll just give you as a closing, and maybe I'm showing my age, but I remember when it was all the early adopters were using Facebook. And then it seemed like when the mums and the dads and the parents started using it, the kids kind of came off Facebook onto something else. So it's just an example of, people are measured on the early adopters and they're easy to convert. It's about numbers. People aren't measured saying we're doing something great for the, for that age population. So, it's not, I don't have an answer, but that's the reason it's been done in this way today.
Before going to the next speaker, is that also explaining why, for example, banks are most of the time not at the front of innovation because they cannot afford it? Because they have a big customer base that they need to serve and where they have certain expectations?
Look, I think banks have historically been quite arrogant in the way that it's almost like we offer this service, it's not open to other people. I'm talking about competition. It's been a bit of a closed network. And many of the fintechs came and kind of turned it on its head and said, we can operate similar services in a fraction of the price that you offer. But the one problem that I find with banks is that they become so large that the way they're thinking becomes conditioned. It becomes compartmentalized. Each department becomes like a separate company. And I'll give you an example. I go to my bank and I say, I want to get a mortgage. And they say to me, yes, brilliant, we need to get your statements. And I said, well, I don't have any statements because they're all electronic now. And like, oh, we need to go, you need to get it verified, get it printed. And it's the same bank. It's just an example of things that are just disjointed in a way that they shouldn't. So I think that they've been operating in a certain way, and it's almost, this is the way we've always done it, and it's been good. And the new players have come and turned things on its head, and they're willing to operate and launch products at a fraction of the costs on the margins that they operate in. And the other thing is, it's about mindset, right? A bank would launch a product or service, they would plan it, develop it, and it would be in the market 2 to 3 years, and the market can often move. Often what fintechs do is that they develop along the way. They talk about, let's get something out there and let's get learning from the customer, because you can't second guess what aspects of your product the customer will like. And they learn and they develop it while it's on the road. So they're building the ship while it's out to sea.
Would you agree, Gaz?
Of course, not totally. It's a bit of a narrow view, of course, on reality. But I'm certainly agree. And what we'd like to say is, in Europe, of course, we talk about PSD2, open banking. What one of my preferred statements, this has been a massive wake-up call. Too long they were dormant and it was too easy, and then we had the crisis from 2008 and their image problems, and then digital services came up, fintechs, agile working, MVPs. But I think they pretty much closed the gap. The point is that the financial services are a regulated industry, and what you typically see happening now, that once these fintechs that have very nice niche products are encountering the same problems with the regulators, because payment institutions are also my members, they are running into the same problems as the incumbents, i.e. being welcome to the pleasure dome, is what we say. Go talk to the central bank first before you get a license, and maybe you'd better sell your service to a bank than applying for a license yourself. Because typically what you see is that slowly and step by step, the spirit and the innovation is sort of not dying out. I mean, I'm not a native speaker. Is sort of I can't find the right word, but I mean, it's all about legal and compliance. And I think about 20% of all staff in the banking industry is doing compliance, AML stuff, reporting, etc. Resources you should be using to build nice and customer journeys for your customers. So I don't fully agree. It's easy if you are an incumbent, you have to be everything to everyone. Banks typically couldn't choose, okay, we'll just divest the mortgage business or the payments business, but they couldn't choose. And they have seen for the last decades already that the dinosaur's tail is being eaten by the rats, and it takes some time before it gets to the little brain in the little dinosaur's head, right? So it's fascinating. Let me say that.
Jeremy, looking at the security of all these innovations, of course, you have these banks well regulated. They understand what security measures to take, etc. Fintechs, they start to understand it as well, because, well, increasingly longer they become a mature industry. But if we talk about innovation and then making sure that it's inclusive, that we're not solely looking at the tech savvy users, of course, we need to make sure that you look at security from the broadest possible range. Will you consider the security industry inclusive enough or diversified enough to make sure they covered everything? What measures do you reach that level of inclusive security?
Rick, that's a really good question. I think that one of the things you've already got the feel of in the discussion so far is just how much payments have changed in the last 5 years and are going to change in the coming 5 years.
Yeah.
And that really, from the PCI Council's perspective, gives us two distinct challenges. And the first one is that we're seeing with the fintechs you've mentioned, a lot of new companies seeing opportunities in the payment space to introduce new products. As Suresh said, it's trying to do things in a slightly different way. But as Guy said there, there are regulations and requirements. So these new entrants, if they're coming in from not a payment security background, may not understand that actually there is a lot to do to ensure that however they're moving into this space, they need to ensure the security of the cardholder data. So one challenge is that we have to try and reach out to these people. Our role is not to say, no, I don't feel like I'm the bad parent saying, no, don't do that. What we need to understand is, well, how are you doing it and how can we do this in a secure way?
Conditional,
now,
yes.
As a standards body, we're playing catch up. We play catch up all the time. We don't know which way payments are definitely going to go, how a change is going to come through. So we're trying constantly to reach out to organizations to get them involved with the work that we do so we can see how that is going to change, which areas. And we see that with mobile payments. Mobile payments came in all over the place. And suddenly we're looking at, well, how is that data being protected? Where is that data being sent? When is it encrypted? What's happening? So it's really sort of two distinct aspects. One is trying to understand what the fintechs are doing, what the industry wants, and then trying to provide good levels of security so that people can have confidence that if I'm using this technology or if I'm using this particular way of taking a payment, that I'm confident I'm going to look after the customer's data. And I think one other thing is that a lot of the merchants, and it's not just tech savvy, this is a lot of merchants will come to me and they'll go, Jeremy, we're experts at selling. We like to sell products. We're really good at selling new clothes or new shoes. We're not security experts. And that's where we have to do the training. That's where all of us on the panel have to step up and say, okay, we'll try and simplify that. We'll work with the tech companies so that we'll take some of that so you can just focus on the selling, knowing that we are looking after that cardholder data.
I would like to ask a question coming from the audience, from David Hammond, who asked, do you find QR code payments as another trend in e-commerce? Maybe a relevant question for you, Jeremy, or for Jes, with a lot of expertise in Ideal, etc.
So certainly from our perspective, QR codes are something new that we're having to look at. We're working very closely with our friends and colleagues at EMVCo just to understand how that's going to work. Is that, and there are different types of QR code as well, some run by the merchant and some presented by the consumer. So we need to understand how the two work, what it will mean. And again, where does it feed back to cardholder data? Is that further back up the chain so that what do we need to protect? I know one of the challenges that we came across earlier was that criminals were basically putting a sticky tape with their own QR code over the merchant. So instead of thinking you're going to pay a merchant, you're actually paying the criminal. Criminals always like to receive money directly. So it's, again, new technology, new challenges, but yeah, we see this coming through and it's something we have to look at.
Because what's interesting there is that you're talking about technology that's very convenient, very easy for everyone to use. And the innovation is probably happening behind the walls at the other side to make sure that you have the required security, etc. Now, in the Netherlands, you have many, many years of experience with QR codes, isn't it, Jes?
We've been working with it for years. 5 years ago, everybody said, "Oh, this is old technology," and suddenly QR has sprung up again. And what we will typically see, it's funny that you mentioned it, Jeremy, the card holder. Who needs a card anymore? You know, I mean, the cash and cards. I mean, that's history, right? So we got mobile and we do everything other. So what we typically also see in Europe, that the new European Payments Initiative is aiming at building, let's say, a European homegrown alternative, as the European Commission would like to see it, and no longer based on the cards industry, the card standards, but on instant payments, at least as an alternative to the good old card-based payments. But it's also a matter of culture and habits. I mean, even if we've had Ideal QR available technically, we even have an app, but since contactless card payments are so immensely popular and immensely cheap, at least in the Netherlands, we say you can't win from PIN, as we called our scheme. I mean, I tried to sell it to the merchants. Oh, it's a superior customer journey for the consumer. Yeah, right. But is it cheaper for me as a merchant? No. So don't go away. I mean, it will come, but it's also a matter of business case for the retailers, right?
Yep. All right. Maxime, I haven't given you the word yet, but I haven't forgotten you. Your extensive experience in startups innovation gives you a very wide view on the fintech industry and also very long term, given your position at CoinChange. How do you make sure that in the future your solutions are fit for all? And well, I was reading the newspaper this weekend, and one of the news items was that, for example, Bitcoin investors are predominantly male.
Yeah, you know, let me answer your first question, and I think there's no straight answer. I mean, it's really impossible to innovate for all and make your product all inclusive, right? Because of the regulations been said before, plus the market itself. I mean, when you go to market as a new product, you have to, as Suresh was saying, you have to identify your niche, you have to identify your metrics, your cost per acquisition, your lifetime value. So you can't really target too big of a market. That's what crypto was originally as an idea of a free market, right? And everybody has an access just with the wallet. It comes out as not as easy, right? Right now, when you look at the DeFi, right, it's more of the unregulated space that you can just connect yourself to the yield farm or an interest. And it's also been designed as a decentralized platform to allow anybody with a wallet to connect and do your own banking. And it's not as easy as it's said. I mean, the customer journey is not very convenient. Not everybody's tech savvy enough to use that platform. So I think that premises of crypto being highly widely adopted and allowing the inclusion of different categories of users is something that's still to come. Even so, Coinbase is $100 billion business right now, valued more than the NASDAQ, and it's a promising technology and promising market. But I think inclusion overall, to Suresh's point, comes from assembling the team as well, making sure that there's diverse backgrounds, that everybody has a view and a say in the business, because usually there is different backgrounds and different people in the business, but there is no horizontal management, right? Or no ability to raise a concern or a product. So, I mean, that's been kind of my thesis on the management side, following like Ray Dalio, having a full transparency on the business, allowing every stakeholder to raise a concern and be reasonable in their discussions. That's the only way when the truth is going to come to the market and when the product is going to be ideal for the consumers, that it's targeted. And the evolution, to the Suresh point as well, of the product. I mean, obviously, when you're in the operational mode, you're slowing down because you're always have a customer feedback. And you will go towards those customers that it's kind of a rabbit hole, because first early adopters will provide you feedback to the product evolution and the roadmap. So you'll have to tailor it and to keep them and retain those customers to increase their lifetime value. So the market will direct you to a certain demographics at a certain point. And the tech industry and payment industry is really fast evolving, no matter the regulation. I mean, right now, if you look at the states, they regulate crypto on a state-by-state basis, right? And so the FinCEN is a federal body. They have MTO licenses, money transmission licenses on every state. The only recently introduced a Wyoming license that covers special SPDI, special purpose depository institutions, that have been acquired by Kraken and Avanti Bank. But the regulation, I mean, to Jeremy's point, is always catching up, because the market and the consumers, they dictate, first of all, the direction of the product and the evolution of the technology, because they provide feedback, and customers come first in any business. Is it offline, online, retail, fintech? So I think inclusion for all, it's possible on a wider scale of things. If you look at, let's say, different categories of businesses, insurance, payments, derivatives, and they're combining with multiple hundreds and hundreds of businesses, they're building that innovative landscape of the future. But overall, for a single business, for even a big business, make it inclusive for all, it's really, really big undertaking.
Yeah, all right. I got two interesting questions from the audience, and one refers directly to the discussion that we were just having. Do you think that Generation Z is going to have an impact on the e-payments in the future? Maxime, expect your...
Oh, okay. So I think, Generation Z is obviously going to have an impact on the payments in the future. Obviously, I mean, that's already changing. I mean, if we're all kind of in in a technology race right now, right? I mean, you look at China; they're crazy innovating on the payments, on the fintech. I mean, and to say the least, they might be at the forefront right now on the payment side as well as crypto, right? With their, I mean, U.S. and the SEC Commission overall, and Canada specifically is lagging behind. I think Europe has been really great with the new startups like TransferWise that's been around for 10 years, right? And that are getting the mass exposure right now. Revolut is doing pretty good. There's a lot of products that have been worked on for the last 5-7 years that are coming to market right now. There is no overnight success. Obviously, things are changing right now, and I think crypto is here to stay, right? A lot of digital native people like Generation Z will be using something that's cross-border, something that's for them easy to use, right? Again, and to the point of inclusion. I mean, and definitely businesses and regulation will adapt, and they are way more advanced than we are. I think, I mean, I'm 35 and I feel old when I talk to someone who's 15, right, or 16, and they have very different view on not only on, I mean, I'm not talking about geopolitics or economy here, but on the technology and the products like gaming. Yeah. Like I look at my son playing Roblox. He's like 10 years old, right? And he can create his own game. He wants to do his own website. He wants to take PayPal payments. He has a chest. So chest does when he wants to pay his counterparty to play or have a tournament. So they use already payments, and they're trying to find a better solution than PayPal. I mean, he's been asking me, Father, PayPal is not as easy. I don't have my email, and how can I pay? How can I? So they are really thinking about it, even when they're 10. I mean, and you were talking about Generation Z, who's 20. I mean, they're using crypto right now. They're using PayPal. I think there's a lot of things that I don't know that's happening right now under the startup community. I mean, Suresh may be a better fit as well for that. But definitely that will impact the direction of the business overall on the market.
Before going to Suresh, I would first like to ask the question to Erin. Erin, is my observation correct that until recently, most of the innovation was going to, we're gonna use new channels for making payments, and that today people that are in the innovation space are more looking at improving the user experience of the same payment means, meaning that maybe we are lowering the ease of access. So also non-tech savvy people can start using very convenient technological payment means.
Yes, and that's actually an extremely important point, because I think we really need to question how we define two things. One is tech savvy, and the other is what we mean by financial literacy.
Yeah.
So who is tech savvy today? I would say that actually most of us are pretty tech savvy. Most of the products on the market actually can be used by lots of people. And maybe you might have a few problems here and there, not knowing how to do something, but most of us can actually figure out how to use the products on the market.
Yeah.
Actually, the bigger problem seems to be people's fear rather than their ability. So you'll find people who are perfectly skilled, perfectly know how to use technology, and they are able to go on the internet and research different kinds of tech and make good decisions, but they're afraid to use things, because they're afraid mostly of fraud or because of their data potentially being used in ways they don't want. And that's what's actually stopping people, not a lack of skill. And with respect to financial literacy, we really have to ask questions about how literate we think people.
Oh, you're muted.
Accidentally muted, Erin. There you go.
Many of the traditional kinds of tests of financial literacy are actually very complicated, and assume that to be financially literate, you have to know a great deal of things, make all kinds of calculations and know all kinds of things about options and the stock market and whatnot. But most of us don't actually need to be that financially literate today, precisely, Rick, because of what you say, which is that these kinds of products are making it easier. It's much easier for us all today to go and download an investment app and figure out how to make an investment than trying to wade through some very complicated website provided by a bank or similar.
Yeah.
Can I just add to that, Erin? There's one experience we had in my country over the past year when we raised the contactless limits of debit card payments because of COVID-19. We typically saw that the group of 65 and over who were not very heavily using their debit cards with the card and PIN suddenly changed from cash to contactless debit because it was convenient, and then suddenly the threshold or the barriers were gone for them, and suddenly they leapfrogged from cash to contactless, which was great to see.
Yeah, there was no alternative. People were forced to adapt, and suddenly they realized the convenience of digital banking and digital payments. Yeah. Suresh, how would you answer the question on the Gen Z that is currently creating the future of payments?
So look, I agree with many of the things that Maxim said. In terms of we talk about payments like everyone talks about payments, and it's something that people, payment is something that is a requirement. And one of the divisions I almost feel like is the older generation wants security and convenience, and the younger generation want convenience, and security is a secondary thought until it goes wrong, of course, right? It's like, it's not a consideration. I remember the time when we were always drummed in that when you buy something on a website, unless you see that lock on the top left-hand side, don't buy it. And now I realize I don't even look for it. But actually, if it's not a trusted site, you sit there and say, oh, which card should I use? I don't think the younger generation feel like that. I feel like they're much more easy to say, yep, I'll do it and give it secondary, without giving it too much secondary thought. But the one thing is that the trend that we see is that it is all about convenience. And I think the embedded payments where the payment happens and you don't think about it is something that the banking industry really want, because in many ways it encourages kind of, the convenience, and it's before you know it, you've tallied up many small transactions to do something larger, from a credit card perspective. When contactless first came out, it was very unemotional. It was like you just tap and pay. There was no emotion attached to it, where if you're taking the cash out, there's a visual like, oh my God, I just spent this. But contactless took that out of it. And I think the invisible payments or embedded payments, and I think, something like Uber is a prime example of that. You do the journey, you jump out of your car, you don't think about it, right? Then you see the receipt at the end of the day and you say, oh, that was right or that was wrong when you query it. And ultimately, payments will be a secondary, something that happens in the background. You don't think about it. And that's where it's going. And do
you think that's the reason, for example, why QR codes are popular again? Because I remember QR codes for me a few years ago, that was something from Asia. And it's too complicated to understand. People don't want to work because it is too it's too conceptual. Now suddenly everyone's using QR codes.
So I'm going to answer that from my technology hat on, because I know many people that would come and say to me, we want to do some really amazing things on a card, on MasterCard, Visa, and they say, oh, we want all this data, we want to get the basket items. And we sit there and say, oh, unless it's like a level 2 PIN, you can't do that. And now with QR code, you have an opportunity to leapfrog that. There's so much additional data you can do. There's so much more you can do with QR code than when it comes to just the data that goes through, card schemes. And I'm not saying there's a limitation to it, but you've got to remember there's all this infrastructure set up. There's a lot of legacy you've got to deal with, where when you're talking about QR code, there is an opportunity to reinvent, and you can have static QR codes, you can have dynamic QR codes, you can have multi-sharing QR codes. And I think when you look at WeChat and Alipay in China, where you could have a guy just selling tomatoes and all he's done is printed a QR code and he gets confirmation the payment's done. They don't need to worry about hardware. And I think to many...
They don't need to understand technology. They don't need to be tech savvy.
And when we talk about merchants and we talk about new ideas, oh, isn't this a great new payment method? The first thing merchants want is, how much is it going to cost me to process this transaction? But that's not the main driving force. It's like, do I have to buy new hardware? Do I have to get a new terminal that does contactless? Do I have to then pay for that? And I've got to pay the acquirer and all of those things. And I think that's the pain point. I was in the payment strategy forum with the PSR into kind of the FCA. And one of the biggest things when it was about contactless was, do we have to get new terminals? Or when Apple Pay came out, I was like, do we need to get new terminals? That was more focused than anything else. And I think that there's a reason for that, because it's costly.
It's costly and it's a hassle. It distracts people from doing the business that they want to do, which is selling.
Yep.
Yeah. I'm going to go to another question from the audience for Jeremy. Advanced payments is killing privacy. Do you agree?
Interesting question. Advanced payments killing privacy. No.
I'm going to ask the same question to Gaz afterwards.
No, I don't agree. I don't agree. I think if you just listen to what we've been talking about there with new payment techniques, you don't have to you shouldn't have to give away so much personal information. I think one of the challenges that we've come through historically has been that organizations wanted to gather so much information about you. And I think people have woken up to that. I was on a website recently and going through, and this is, by the way, this is coming back to your Gen Z question as well. Yep. Gen Z people hate filling forms in. If I go on a website, why do I have to fill in 20 detailed items about myself to buy something? I just want to point and click. And that's not about privacy. And I was going through and I was buying something online, and it was, what's your date of birth? Why? Why do you need to know my date of birth? I don't go into the local supermarket and take something off the shelf and go, I'd like to buy that, please. And my date of birth is. It's just unnecessary. So I think organizations, I think merchants have got to learn, do I need to ask these questions? What am I wanting this data for? We went through and collected tons of data that was never used. And I think people have woken up to actually the criminals are now really being able to utilize personal data to, they're monetizing it. They're monetizing personal data. So no, it doesn't have to. New technology and new payment techniques doesn't impact on privacy. It should really help drive things forward. So we're protecting personal data as well.
Yeah. Yes, many years ago, we started a discussion on open banking, and I was working at a bank, and for me that was all, it's gonna kill privacy. It's gonna kill privacy. I understand better now, but yeah, according to you, is it killing privacy or not?
No, most certainly not, at least not in my country, and I don't think in Europe or the UK for that matter. I mean, we have very strict privacy regulations, the GDPR. Yeah. I mean, there's only so much you can do, and as it happens, I think the whole debate about open banking, PSD2 open banking, very much sparked that debate also between the institutions. Especially we've seen the new guidelines from the European Data Protection Board on the interplay between PSD2, open banking, if you will, and GDPR, and which are pretty strict. And probably many people will not yet realize it, but what we see coming up now is that the data protection authorities are catching up with the rest now, and they are saying, okay, yes, open banking, open finance, that's all well and fine, but what about privacy by design? What about data minimization? You can't just give away the whole candy store to account information service provider. Perhaps banks should filter the data out, which they probably, the APIs haven't been built that way, but we see very much more strict interpretation coming up here. I don't think we run that risk, and anyone that wants too much data should have consent for it or any other ground to collect those data. And I really, really believe that the data protection authorities have really woken up by now, and it's going to be some tough stuff coming up to become compliant with what we believe their new insights are and now are.
Very interesting. And as you were speaking, that made me think of a question to Erin. Erin, does this mean that we need to redefine financial education? Because what's actually happening during this session is that we are going from the question, are we innovating solely for the tech savvy, to we are probably innovating for all, but it's only the tech savvy that understand that it's all well secure and private.
Yeah, that's right. I was super interested to listen to both Gijs and Jeremy on this issue, because they point out there's a massive need for education of both consumers and businesses working in the industry. And with consumers, the education isn't so much about financial literacy, and often it isn't even so much about technology, but it's about issues of security. And those are very long-standing issues. You know, there's always been fraud around. Fraudsters have long targeted vulnerable groups like the elderly. You know, you just think of phishing campaigns via telephone, for example. This kind of social engineering has always happened. So perhaps in some cases, we need to kind of work out what are these different areas we need to educate in, because it's not always the tech, it's not always the finance. It might be more about people's other ways of thinking about their own safety and security and how to relate to people out there in terms of what risks they face and might happen to them through, you know, through using, like, you know, a financial app on your phone, perhaps, but perhaps some other means as well.
Yeah, no, very interesting. Maxime. Sorry, go ahead.
just a question to the panel, and I just want to work out, this is the general panel or just me, but my landline now is basically only used for phishing calls or an elderly relative. And I'm just wondering, is that just me or is that everyone?
I don't have a
landline.
I don't have a landline.
Me neither.
I do, and it is elderly relatives and phishing calls. Absolutely.
Yeah, no. Going back to my question for Maxime. Maxime, how do you deal with that in the new world of the new economy of crypto? Because, well, privacy has been quoted as one of the main characteristics. But what we see, it has evolved as well, and it's become less and less anonymous simply because regulation allows it. But how do you make sure that your audience keeps well informed about this fast-moving evolution of technology?
I think in crypto overall, guys, go ahead.
So you said fast-moving. It's not fast-moving.
But it is evolving very fast. It is very recent, though. Don't underestimate. I mean, if you look at cards, it's only right now that cards have been overgrowing cash. And how long do we have cards already? That's from the 40s.
Yeah, sorry, I was thinking of an anecdote. Perhaps just if you can spare 30 seconds. I mean, it was I think 7 years ago when I stood with a guy from Bitonic, which is a Bitcoin exchange in the Netherlands, that wanted a license from the central bank because they wanted trust. And they believed a license would give them the trust, so the consumers would trust them and start trading on their platform. Sure. With a guy from the central bank and myself. And both the central banker and myself told the guy, you can't get a license for the trade in tulip bulbs, right? But this week, they, because fast forward a couple of years later, now they are being regulated, and they have taken the central bank to court because they believed they were having too strict regulation. I mean, I was just thinking, what do you mean fast moving? That was 7 years ago when we said it's the trade in tulip bulbs, and now they are regulated and are suing the central bank.
I guess a good point. I find in crypto there's always a fine balance between being highly regulated, unregulated, and somewhere in between. So right now, as I mentioned, DeFi, let's say, has no regulation ground in the States, right? They're just discussing that. I know that in Europe, it's also a new frontier, so there's no real regulation around the DeFi concept. Crypto brokerages are well established, and there is an understandable framework. It's just a matter of their internal compliance, AML, KYC. There's a lot of players like Jumio right now who's offering onboarding as a selfie. It's very easy for the customers as well. There is chain analysis, right, that's used worldwide as well for tracking the transactions, making sure there's no bad actors. So I think a lot of people are moving into the direction of being regulated in some sort because of the mass adoption and peace of mind for the customers. I understand that exchange that came to the central bank asking because the trust is essential, and a lot of people have a bad smell in the mouth for crypto, right? There's ICO boom, right, that a lot of people get burned and lost their money. So there's right now, I mean, there's always something with any evolution. I think there's a leapfrog moment when a lot of people, I mean, like a dot-com boom, right, become bad actors insolvent. There's customer protection issues as well. So I think regulation is a must in any industry to go mass market, and trust is always an issue.
Yeah. All right. Next question, and I'm going to ask you to Suresh. Increasingly more payments will be embedded in day-to-day activities. We step away from the one-size-fits-all. When looking at the future of anywhere payments pushed by 5G and the IoT, the Internet of Things opportunities, what should the industry keep in mind to be more inclusive in the future, according to you?
So look, one of the things, and it's linked to crypto as well, is that people often get hyped about, they think something specific is the final solution for everything. I'll give you an example, right? Your credit card, it's very convenient for you to buy something over the counter. If you want to buy something online, it gives you protection, which is great. But, if you were sending money overseas, or if you were doing, you wouldn't use your credit card. And what people tend to do is they sit there and say, well, crypto is or blockchain, we're going to go over the counter and buy something using cryptocurrency. You're going to buy a packet of crisps. And it's like, people think that that's the mindset. And often it's kind of one solution will do everything globally. And I think people need to realize that there are great services and products for different aspects, whether it's money remittance, whether it's paying something over the counter, whether it's kind of even kind of company financing, like there's different measures and there's different vehicles. And people often get hung up thinking that one solution is everything. And, you get the crypto people that often like crypto will do everything. And then you get, people that are kind of traditional banking that will say that will do everything. And I think it's a different approach. The truth is that there are different solutions for different services, and some of them are the best in breed, and some of them are still evolving to provide solutions that will be groundbreaking. You look at import-export overseas payments, and something like blockchain with smart contracts is truly groundbreaking. It ticks all the boxes that you would want it to do, and all the weaknesses you see right now when it comes to a normal kind of money flow processes. So what I was going to say is that when it comes to kind of different payment methods, I think people need to not get hung up thinking one solution fits all. And when it comes to things like the IoT of things, look, we just go back 5 or 6 years, and there was all these, the fridge will tell you when you've kind of run out of milk, and it will order it for you. And look, I think there's aspects of value to that, but many people, they still want to be controlled in it. They actually want to initiate it rather than, it's a bit like, you've got...
There's a contradiction in there. On the one hand, they want control. On the other hand, they don't want to care about it. They want to deal with money. They don't want to deal with payments.
Look, there's a side of it, and I'll give you an example. Direct debits, right? Most people have direct debits set up, but you're very cautious about who you want to give access to your bank account to. So they're like, oh my God, they can take money out of my account. Now, a lot of people don't realize that with direct debit, there is protections there. But the thing is, you think carefully about who you want to give access to your bank account. Well, we talked about the IoT of things where somebody could hack into your fridge and then, have access to these details. So what I'm saying is that I do believe that we're on a journey, but some of the solutions we've seen in the IoT space are not. I see it as a sledgehammer cracking a nut, because to be honest, I would rather just dictate to the fridge that we need to get some need to get some milk, and it will just order it for it rather than it decides. Because have I told the fridge that I'm not here for a week because I'm going on holiday? And I just feel like, look, it's movement in the right direction, but I feel like some of it is innovation for the sake of innovation. People aren't saying, oh my God, without this, I'm going to run out of milk. Because now you've got these I've just heard about 4 new fintechs, not fintechs actually, kind of tech companies that are competing with Amazon to literally get anything delivered within an hour, right? So
can I interrupt you, Suresh? That's a horrible term, interrupting. But you tend to go into a monologue, it's another thing. Because we're running out of time, I would like to have a question for Erin, if that's possible, because something you said, Suresh, on the amount of friction. This is something that always puzzles me, in that trade. How much friction should there be in that customer journey? Sometimes we want friction because we're for security reasons, and sometimes we don't. Invisible payments. And from the anthropology perspective, sorry, is there any sensible balance there? Sorry to interrupt, Suresh, but
I think that's a great question, actually. And one thing that comes to mind is my own washing machine. My washing machine has this habit. I'll press the button and it goes beep and it doesn't start. If I press the button again, it starts. You think, what's the purpose of that? Why doesn't it just start when I press it? But what I suspect is some designer's gone, well, if we implement a pause in that and make the customer or the user do it again, they're going to look around and see that a sock has fallen on the floor, and they'll be like, oh, great, I have time to open the door, put the sock in, and it can wash everything because that pause has been in there. And I think the same is true of financial services. Sometimes you actually want people to stop and think. You want them to check on what they're doing and not just instantly be able to do everything without thinking about it. These kinds of moments that stop us actually make us consider what we are doing. And in fact, you could think about innovating in such a way that you're not just trying to make everything as smooth as possible, but thinking about where might it be beneficial for for the consumer to have a little bit of time to stop and think without disrupting the ultimate goal of the transaction.
Aaron, added to your point, I mean, maybe it's not related to the payments, but Facebook and Instagram, they had a finite swapping lines. So the newsfeed was finite about 5 years back, and they changed it to infinite. So the consumers, when they were switching, they had to stop and press the button, open the newsfeed to look further, and had to think. Right now, they just can keep scrolling down with nonstop because it's an infinite newsfeed. So it's a very good point for sure.
Mm. I mean, I think you need to, like, my quick take on it, as someone from the panelists asked the question, I'm gonna take the role of panelist now. I think a lot about this as well. And the pain of paying, I think it's a very relevant pain for many consumers. So when you are in a situation where you may have this impulse buying, I would say try to keep some pain of paying in there. But if you have certain situations, I mean, my bank in Belgium, they have these invisible payments for parking. Parking is a very conscious act. So you park your car and you know I have to pay for parking. You don't need the pain of paying in that process because it's something that you have to do. It's different than buying candy in a store, for example, where I think people should be reminded, hey, that's gonna cost you. And with parking, I mean, you know, it's a given. That would be my...
The one thing I was just gonna add is that, you know, I think it all comes down to being a risk-based approach.
Yeah.
You know, and we often say it in the regulatory space, but it's like, if you are buying something for 10 euros, I think you just want convenience and speed. You know, if somebody sent you a link or something, you would just probably click on it and it's kind of, you know, you want convenience. I can assure you that if you were buying a house and I sent you an email that says, here's my bank details, transfer the money for your security deposit for your house, you're going to be ringing the solicitor, you're going to ring in and saying, can I double check this? Can I get another validation? You're going to, because it's the amount. So I think that there is a danger that you can actually not have enough friction. And there's some fintechs, by the way, where I put the bank details in, and then I'm so used to saying send, and then I get a confirmation page that says, are you sure you want to send it to this person? This is the sort code, this is the account number. And some of the fintechs didn't have a confirmation page. So when you press send, it's gone, and you're like, oh my God, I don't even know if I checked the account details. So there is a danger.
Send an email to the support desk. Yeah. No, absolutely. We are getting near the end of this session. So I think if you look at what we've been discussing thus far, I would like to thank all of you for your openness, because in fact we've been preparing only half of the session and all the rest was based on questions that you never heard of. I'm very glad the direction this discussion went to, going from talking about should we innovating solely for specific segments to how do we make sure that even if we innovate for certain segments, that these people are well trained, well educated, talking a bit about the friction as well. So I think we had a very broad discussion that went a lot further than what the initial topic was, for which I would like to thank all of you guys. In terms of questions from the audience, there weren't that many, but the questions that we got in, I think we got them answered. There was one more about the usage of biometrics. As we have one more minute, maybe I can raise a question to Jeremy. Is the usage of biometric tools making it easy for customers all age?
Simple answer, yes. The challenge from a security perspective is, again, where does that go to real life data that the criminal can use? So using biometrics makes life easier. We've just got to make sure up the chain we can secure it. All
righty. And then we have 30 seconds, sorry. One more question for Gijs. Why do banks ignore their clients who do not want to use smartphones for customer and transaction authentication?
Ignore? Well, I'm not sure which country this question comes from.
I don't know either. It's a question from
in my country, that's not the case. And at least, fortunately, we see that most of the elderly, at least, what is elderly these days? Is there 50 plus, 65 plus, 70 plus? We're talking about 65 is too young. We should talk about 70 plus.
Yeah.
But these people are pretty savvy with their mobile phone. So I don't see that problem, to be honest.
All right. Yes, Jeremy, Suresh, Maxim, Erin, thank you all for your contributions. It was a great discussion, and I'm pretty sure that the audience enjoyed the session as much as I did. There are a few more sessions coming up, if I'm well informed. And yeah, I hope the audience enjoyed it as well.